Hi guys, I'm Dan, this is Kai. We are the directors at Crescent Mortgages. Today we're going to be talking you through the top 5 things you must do before you find a property. Make sure you stay tuned to the end because every point is important, and we're going to finish with a couple of key tips which will get you ready for applying for a mortgage, which you'll need to do once you've found a property. Let's jump into it. So before we jump into it, just to remind you that we're not YouTubers, we are
mortgage brokers.
We're mortgage brokers. So we are here to offer you advice, and obviously we can assist you with applying for a mortgage when you're ready. So if you have any questions at all, you can head to our website, give us a call, drop us a message, or leave them in the comments, and we'll do our best to come back to you and tailor our advice to your circumstances specifically. Without further ado, let's jump into it. So, number one.
Number one, speak to a mortgage broker or a mortgage professional.
That's a good one.
Yeah, it's my favourite.
Elaborate?
Yeah, so this is to make sure you can get a mortgage, you know what it looks like, how much it's going to cost you. So there's a few things there, isn't there, I suppose, that you would go through in that conversation. Ultimately, you come out with an agreement in principle. That's what you want to come out with at the end of that call.
Yeah, and what is an agreement in principle?
An agreement in principle. So that is a promise, if you will, that you will be able to get a mortgage. Normally a certificate of some sort that an estate agent will want to see when you're making offers or even viewing on properties. And it's to say that you've been checked over by either a bank or a mortgage professional.
Yeah. It's not a guarantee, but it's what the estate agent will normally ask to see before they let you make an offer on a property. So you normally need that certificate, which the broker will be able to provide you with. We should highlight that there is a whole another world of kind of mortgage specifics, which we're going to come to in our next video. We're just going to kind of touch over it today. So speak to your broker. They will be able to give you all the guidance you need in terms of what interest rates to expect, what kind of mortgage payments to expect, provide you with a certificate and answer all of your questions to get you ready to know that you're going to be able to afford the property that you want. Which leads us on to number 2, understand your credit. So you don't have to obtain your credit file at this stage or before you apply for a mortgage. It's not mandatory. But if there's any question marks about your credit, if you're not sure what it looks like, if you've ever had a dispute with a finance company or a utility company, or any potential missed phone bill when you were younger, if there's any question marks, we'd always encourage you to check your credit file, wouldn't we?
Yeah, you can get copies of credit files relatively easily nowadays. We have a link in the description for a company called Check My File, which checks the 3 main credit companies. There's 4 in there, isn't there?
Yeah, 3 or 4.
The main credit companies in the UK, and they will quite easily tell you if there's a problem or not. And if you're unsure, you can always download the report and send it to your broker or whoever you're dealing with for your mortgage, who will be able to look at that as well. But it's definitely useful. You can normally get free trials or something on those lines, just to make sure it's not something that causes you a problem later on down the line.
That's a good point, actually. If you do obtain your credit file, and again, in the first conversation you have with a broker, they'll probably talk you through this and they'll ask about your potential credit history. But if you do obtain the credit file, always send it over to the broker. They can be quite complicated to look through. You might not understand what all of the kind of the symbols and terminology and numbers mean. So send the full report over to your broker. They'll go through it and they'll be able to highlight if there's potentially going to be any issues. If everything looks clean, generally most people pass the lender's credit check. If you haven't had any credit problems, obviously if you have a smaller deposit, it can be a bit stricter, but as long as you've got a clean credit history, 9 times out of 10, we will expect you to pass the lender's credit check. Number 3, Kai.
Work out your budget. What can you afford? Getting the mortgage is obviously one of the stages you'll go through, but it's important that you know you can afford that. Now, if you've spoken to a broker, they should have given you an indication of payments. You should have an idea of what it will cost each month, so you can start to now pick apart, right, what does this look like? How much is my mortgage going to cost, but also how much are my living costs, my council tax, my utilities, my food shop, all those sorts of things. It's really important that you check that you know you're going to be okay. Without knowing that completely skews the property you're looking at potentially.
Yeah, just because the mortgage lender will give you the amount that you need to borrow, and they've confirmed that they'll lend you £200,000 and that will be enough to buy the property that you want, for example, you still need to be comfortable that the outgoings are going to be affordable to you and the way that you live. So again, your broker will be able to give you a good idea of kind of expected interest rates and a rough idea of what your mortgage payment will be. And obviously you'll need to have a little look at kind of the council tax in the area, maybe some averages of utilities as Kai mentioned, and obviously your food costs if you've got any kids, that kind of stuff, to make sure that it all fits within your kind of disposable income or your income each month. If it doesn't, then maybe you need to, consider taking a little bit of time before you move, or whether you maybe look at slightly cheaper properties, which keeps the mortgage payments down. 4, save your deposit. So as you probably know, with pretty much every purchase in the UK, you will need some level of deposit to purchase a property. They don't really do 100% mortgages anymore. So the minimum deposit that some lenders will accept is 5%, and generally this is how it's assessed in 5% increments. So the minimum is 5%, but bear in mind that is the smallest. Not every lender will allow a 5% deposit. Many need a 10% or more, but there are some that accept 5%. Although bear in mind, the bigger the deposit, generally the better. So the bigger the deposit, you'll find that the criteria and credit checks are a bit more lenient. The interest rates can be better. You might have more lenders to choose from. But if you only have a 5% deposit, it is possible, providing you pass the credit check and the rest of the affordability assessment. So you're going to need to save that deposit pretty much ready for when you find a property, and definitely before you obviously complete on that purchase a few months later. Any kind of documents they might need, I guess, to prove that?
It depends where it comes from. So you can have your deposit, savings obviously great if you can save the money, but it is expensive buying property often, so people will save in different manners. You might have Help to Buy or lifetime ISAs where you'll get government bonuses and things like that at the end of it, or it might be borrowing from mum, dad, or something on those lines.
Although ideally not borrowing.
Gifting, I should say. So a gifted deposit from mum or dad, the difference being that there's no expectation it's paid back.
If it's loaned to you, either from someone you know or from a bank, generally lenders don't like that. They don't like it because then essentially you've got the mortgage is a loan and the deposit is a loan, and your debt is kind of geared to the maximum property value. So, but if it's a gift from an immediate member of your family, that's normally fine. They might just need to fill in a letter or a form to confirm that it's a gift. Savings, you're going to need to show kind of bank statements to show that is savings, and that we're within our rights to ask, and the lenders can ask for as many bank statements as they need to trace the source of that money. They're the two most common deposit sources, aren't they?
Yeah. I'm going to say there are only others that come up commonly.
Yeah, but you will need to evidence your deposit, so make sure that you've kind of got that ready to go. So our fifth and final point actually will then lead us on to some of the important tips just to get you ready for when you do actually find a property and need to apply for the mortgage. So once you've covered the first 4 points, you're then in a position where you can start looking for properties. So have a look online, you can reach out to local estate agents, have a little look on Rightmove, start to get a feel for what's out there kind of within your budget in the area, and then I guess they can go and start just looking for properties and going and viewing them, can't they?
Yeah, exactly. If you've done all the steps beforehand, you are ready to find somewhere. And it is, as you say, going in, talk to agents, Rightmove, view properties, make offers, and the bit that should be really enjoyable.
Yeah, it's always quite kind of I don't know about yourself, I remember for me, the moment when you realise you can actually go and start looking at properties for the first time, it feels like quite a big moment. No one ever feels truly ready, do they? You think, hang on, am I actually ready to start? But that's once you've covered the first 4 points, you've got your agreement in principle, you've kind of got most, if not all, of your deposit saved, and you're comfortable that the mortgage payment is going to be affordable, start viewing properties. And then this kind of leads us on to a couple of the important tips then at this stage. So I guess the first one, view as many properties as you can. It will be impossible for you to compare until you've viewed as many as you can. So obviously that does depend on the market. If there's not a huge amount out there, then maybe that's not possible. But there's a fair few properties in the area. Just go and view as many as you can to get kind of a feel and a comparison. I guess once they're in there, ask lots of questions to the estate agent as well.
As many questions as you can. If you think you might know but you're unsure, just ask the question. The agents, they're there to answer questions. They're there to reassure you that you want that property. Ask as many questions as you can. Questions about the property itself, questions about any other offers on the property.
How low would the vendor be willing to go below the asking price?
Be direct.
Yeah, the estate agent, you know, they may not always be 100% honest because they are working on behalf of the seller, not on behalf of yourself, but you don't know if you don't ask. So, and they can often give you clues. The estate agent wants to sell the property, so if they know realistically that actually they're going to have to drop the price a little bit to sell it, they'll probably, you know, they'll potentially be open with you. So feel free to negotiate. If you're looking on Rightmove, it will normally tell you when the property was originally listed, and if it's been reduced. So if you see that the property's been on the market for 2, 3, 4 weeks, maybe longer, then obviously they're not getting a huge amount of interest and there could be some scope to try and negotiate a lower price. And again, if the property's recently been reduced, it means that they're not getting enough interest at the level that they want, so they're having to start to kind of, you know, drop those levels, and they're getting, could be a foot in the door for some negotiations. So just make sure that you kind of do ask the questions and view the property as many times as you need. If you've seen it once, you're interested, view it a second time, even a third time before you make kind of a final decision. Any offer that you do make to the estate agent, even if it's under the asking price, legally they have to pass that on to the seller. So they might try and play hardball with you, but it doesn't hurt to come in a little bit lower, providing the property's not had too many offers. Of course, if there's loads of attention and offers on the property, then you've probably got less leverage to negotiate a lower price. A few other tips, I guess. They'll need to organise a solicitor moving forwards, won't they? Not quite yet.
Yeah, you'll need a solicitor ready for your mortgage application. So that's after you've had an offer accepted as you're applying for your mortgage. So you don't need to have one lined up necessarily, but it's good practice, I suppose, to have one in mind. Generally, your broker should have a solicitor or a panel of solicitors they recommend. The estate agent will have one. Your friends or family will probably have ones they've used. So having an idea is good. And that'll be a conversation you come on to, yeah.
Yeah, exactly. And then the final one is the documents that you're going to need. So I'm sure a lot of you know that you are going to need to provide a fair few documents when you apply for a mortgage. Now, you don't need to provide these until you've found your property and you're ready to apply for the mortgage, and your broker will let you know exactly what's needed, but it never hurts to get them ready, because sometimes you might not have them immediately on hand and it could slow your mortgage application down if you don't have them. So I guess the key things, generally they want to see 3 months bank statements, just to kind of, you know, see your salary and whatnot going into the account. If you're employed, generally 3 months pay slips, providing you've got 3 months in the job. If you're self-employed,
normally 2 years accounts or 2 years tax calculations and overviews, depending on how you're self-employed and what setup you've got.
If you're a limited company, then you potentially need both. You potentially need your tax calculations and overviews from HMRC and your accounts for the last 2 years. If you're a sole trader, then generally just the last 2 years tax calculations and overviews, or SA 302s, whatever you want to call them. Proof of deposit, as we've touched on, so potentially savings statements, ISA statements, gifted deposit letter. So again, you can start to maybe get those ready. And they will need to run ID checks on you, which you may or may not pass. If you don't pass, it's not the end of the world, but you will then potentially need to provide ID documents. So valid passport, valid UK driving license, which makes sure it has the correct address where you're currently living, proof of address as well, so potentially utility bill, or a bank statement or a council tax bill that's been posted to you where you're currently living. So if they still show an old address, you'll probably want to get those updated as soon as possible, because the documents have to match where you're physically living. We see a lot of people trip up on that and it does delay things. So make sure you look into that. I think that covers everything.
Yeah.
For now, like I say, the next video will delve into the kind of the next part of the process in terms of the mortgage, how to get it agreed, and the rest of the process until you actually get the keys. So stay tuned for that next video. But otherwise, like I say, get in touch if you have any questions and we'll give you advice kind of tailored to your circumstances. We'll see you soon. Thanks a lot.